Hi everyone and welcome to the weekly Forex Outlook with myself, Kathleen Brooks, Research Director here at Forex.com for the week beginning Sunday the 7th of April 2013. Well, there were two major events last week which is really going to pepper how trading goes this week as we start a fresh trading week. The first one was the Bank of Japan. Of course, it announced a huge monetary stimulus. It really knocked it out of the ballpark, was much more aggressive than anyone expected. They are going to be buying another 7.5 trillion yen of bonds every single month. Added to that, they've increased their potentially even do more, the new governor was saying. Of this month, so the 26th, massive day for Japan. We get the next Bank of Japan meeting and inflation data. So we think really we could be kind of meandering with a bias higher up towards that 100 level, but it may take the next meeting later this month to really kind of give us a leg up. But we do think that right now the outlook is still quite bullish for dollar yen, but the gains could be capped the closer we get to 100, and it could be more incremental steps, as I mentioned before. Now, gold also had a really interesting week. Let's take a look at that. We actually dropped 60 bucks on the week in gold last week. And that was on the back of a few factors, but mostly it was on the back of North Korea. So escalating nuclear tensions in North Korea really made people readjust their gold purchases. Essentially, if we do have problems in North Korea and there is a nuclear attack, then that could really dim gold's hopes for any further recovery. Largely because it becomes kind of a human and a geopolitical crisis. Gold is a much better store of value in a financial crisis. So in a nuclear crisis or geopolitical crisis like this, people turn to other more liquid assets like the dollar, like US Treasury yields, and that could certainly that was one of the things I think that weighed on gold as we fell through 1550 last week and dropped, as I said, 60 bucks on the week. However, at the end of last week, what with that very weak payrolls number, we did find a base and we shot through back above 1550 to 1575 at one point. That was the intraday high on Friday. 1575 now looks like a bit of a resistance zone, but we think because we saw the dollar sell off quite sharply, obviously when the dollar weakens, you need more dollars to buy that ounce of gold, helps push up the gold price. We think that actually there's scope for a bit more recovery in gold, and we might meander back towards 1600 just in the next couple of days. But again, do watch out for those North Korea nuclear fears. No one's really taking them seriously at the moment, but they could come and bite the market when you least expect it. And if that happens, then we could easily see gold fall back to that very key support level, that 1525 to 1530 level, and that is the low from 2011. So we're at a really critical level for gold, but we think that the payrolls number has just given it a bit of a reprieve, and we may see back to kind of 1575, 1595 as we enter this week. So thank you very much for joining, and please do join us next week for more.